calls for our market now, and for that we're joined by Stan Shamu from IG in Melbourne. Stan, let's just start with that Aussie dollar, the fact that it really didn't get a hit at all from those job numbers. It kind of fell a little bit, but we've since seen it bounce back. What's behind, I guess, what's driving the strength of it, and can we expect that to flow through to some of the market players today?
Yeah, absolutely. There are quite a few players. There are quite a few factors at play for the Aussie dollar, which has continued to underpin the local currency. I mean, particularly the fact that Australia is one of the few remaining AAA rated countries out there. That's been one of the main drivers of the Aussie dollar. Of course, you know, investors from the likes of Japan will always need a destination which is AAA rated like Australia. So it was always going to be one of the currencies most underpinned by this whole Japan easing cycle. Now, of course, we saw that jobs numbers disappoint quite significantly yesterday. That saw the Aussie dollar drop into that 105 level. But of course, we were looking at some key support levels into 105. This was a resistance for the Aussie dollar on quite a number of occasions, and there was sort of a triple top that formed around that 105 level. So it was inevitable that it will find some buyers there. It bounced straight back to a high of 1058 overnight, but it's since started to drift a little bit. I think the US unemployment claims figure, which dropped to that 349,000 level against a consensus of 362, really helped the US dollar regain some ground against some of these currencies, and that's exactly why we saw the Aussie dollar start to drift into the close of the US session. Of course, the numbers came out at about 11 o'clock yesterday, so that has seen the Aussie dollar lose some of its shine, but I think it's still firmly pointing higher. Any dips will probably continue to be used as an opportunity to accumulate the Aussie dollar. Particularly as well, we're seeing commodities start to come back to life as that Japan easing cycle continues to feed the carry trade and also help commodities start to come back to life. So the Aussie dollar is looking pretty good right now. We're still eyeing that 106 level for resistance, and that's near those January highs. Of course, we came pretty close to there last night, but I think another round of US dollar weakness will certainly push us through to that 106 level.
Stan, what about the US dollar yen trade? Still within striking distance of that 100 level. Do you think we might be able to break that barrier today?
Yes, absolutely. Traders will have to keep some of those bottles on chill before they decide to celebrate that 100 level. Of course, it's been something in sight over the past couple of days, so no one really knows, of course, when we're going to get there. But we managed to go as high as about 99.95 overnight, so that's not far at all. We have come back a little bit, but we've got BOJ Governor Haruhiko Kuroda on the wires today at about 1 o'clock. So, I mean, it wouldn't be surprising at all if we finally do print that 100 level today. He's not expected to say anything new. Of course, everything is out there already, but you always find some speculators who might push the pair higher, just hoping that something a little bit different will come out of this speech that he's got today. But of course, we still think it's just a matter of when, not if, we'll get to that 100 level. We'll probably see a lot of traders looking to take profits around there, so it's definitely the level to watch going into Asia today. It'll have a big impact on how the Nikkei trades as well, and this might feed through to the rest of the Asian region. Of course, we can't forget that later on today we've got retail sales due out of the US, and these might pose a little bit of volatility for the US dollar. And if we do see a pretty good reading from the retail sales number, particularly after in US trade we saw retailers report some improved sales numbers, then there's a high likelihood that these retail sales will come in quite strong, and this might push the US dollar a little bit higher once again, and this would in turn push the dollar yen higher, and possibly that's when we'll trade through that 100 level.
So where to next though once we break that 100 level for the yen?
Yeah, that's the question that everyone's asking. I mean, of course, traders will likely want to take profits at 100, or at least close some of their positions at 100, just in case we get a situation where the BOJ says, hang on, we're happy with the yen in the range 90 to 100. Anything above that might start to hurt some industries a bit too much. But of course, they've got their 2-year inflation target of 2%. So as long as they think they're running at a good enough rate to get to that level, then they probably would be comfortable with wherever the yen is at that time. So I think as long as we're still within a good run rate of getting to that 2% inflation target, then there's not too much to worry about. Of course, they're very committed to getting there as soon as possible. So maybe in the short term, they're happy to let it run, and then possibly in the longer run, they might look to start to keep it a bit lower to avoid hurting some of their industries a bit too much.
Just finally, Stan, I'd like to get some opening calls from you for the local market. A good finish on Wall Street and in Europe. A bit of a mixed session for commodities overnight. What are you expecting?
Yeah, of course, with US markets trading at record intraday highs and closing highs as well, it certainly does bode well for our local market. We're currently looking at a gain of about 0.4% at the open to 5022. Now, of course, we finally closed above that 5,000 level, so that would definitely put some confidence in investors' minds that perhaps the markets turned a corner after the recent slump. But at the same time, I mean, we've continued to get a mixed performance in the commodities space after what has been a pretty good week for them. We're already up about 2.4% for the week so far. That's as at yesterday's close. So anything that's a bit of a gain today will be a bonus for the market. Any week in which we can finish with a 2% plus gain is always positive for investors and confidence. So we'll have to really monitor what happens with these resources. They're probably the key to how the week finishes up. We're currently calling BHP up. BHP a bit lower, about 0.3% lower really, and I think this is mainly due to some profit taking as iron ore actually edged a little bit higher. We'll probably see a little bit of skepticism creep into the resources, particularly as the US dollar gained a little bit of ground in US trade due to those unemployment claims numbers. So as long as commodities manage to trade relatively firm in Asia, then we should see the resources well supported. But for now, I think we'll have a little bit of a lower or a weaker start for some of these resources names, and this might cap the market's gains early. But of course, true to form, the yield plays should help underpin the market. There will probably be some speculation that the reports due out tonight in US trade with Wells Fargo and JP Morgan bringing out their reports just before US trade commences. Then if these reports are positive, this should be positive for the financials across the globe. So this might help underpin the market today.
Stan Shamu from IG, thanks so much for the analysis there. Thanks.
Cheers, Liz.
Well, getting the most out of their workforce is the #1 priority for Australian CEOs. The latest survey by Deloitte has found an urgent need to reform, especially in the face of economic headwinds and factors such as the high Australian dollar. John Miko, Managing Partner in New South Wales for Deloitte, joins me now here in the studio to discuss the results of the latest study, which is the Deloitte Business Effectiveness Study.